Hey everyone, ever wondered how the global share market works? Well, in just 2 minutes, I'm going to break it down for you. First things first, what is a share market? It's a place where shares, or small pieces of ownership in a company, are bought and sold. Imagine it like a giant marketplace, but instead of fruits and veggies, people are trading pieces of companies. Now, shares are listed on stock exchanges, like the New York Stock Exchange, the London Stock Exchange, or the Tokyo Stock Exchange. Each exchange has its own set of companies and operates within its country's regulations. When you buy a share, you're essentially buying a tiny slice of that company. If the company does well, the value of your share goes up. If it doesn't, well, it goes down. Simple, right? But how do prices change? It's all about supply and demand. If more people want to buy a share, its price goes up. If more people want to sell, its price goes down. This constant tug of war creates the daily ups and downs we see in the market. Companies use the money raised from selling shares to grow their business. In return, shareholders might receive dividends, which are a share of the profits, or they might just benefit from the rising value of the shares. Globally, all these exchanges are interconnected. A major event in one country can ripple through markets around the world. Think of it like a spider web. Tug on one part and the whole thing shakes. So why should you care? Investing in shares can be a way to grow your wealth over time. But remember, it's important to do your research and maybe even talk to a financial advisor before diving in. And there you have it, a quick tour of how the global share market works. Thanks for watching, and don't forget to like and subscribe for more quick insights.